While Japan is getting higher inflation as planned, some analysts are beginning to believe it's the wrong sort of inflation. Joining me down the line to discuss is Neil MacKinnon. Neil, Japan's inflationary rise has been driven mostly by gasoline and electricity prices, and higher energy costs could raise business costs and eat into consumers' real incomes. What are your thoughts, though? Is any inflation healthy inflation for Japan?
Well, I think as far as Japan is concerned, inflation is preferable to deflation, and the Bank of Japan's new monetary policy is explicitly designed to overcome the problems of deflation. And what deflation does is that it provides no incentive at all for either corporates or households to engage any near-term spending. The argument is they'll just wait until tomorrow when prices are lower. So you end up having a stalemate, and that explains previously why the economy has been very much in the doldrums, and why this deflationary psychology that's gripped Japan has been a problem, particularly as government debt in nominal terms has been going up, and all that deflation does is actually increase the real value. So they need to overcome that. But as you say, in the short term, higher energy prices, higher energy costs bite into households' disposable income, and that can have an adverse effect on consumer spending. But it has to be said, I mean, if we look at the sort of GDP numbers, Japan has actually been the fastest growing G7 economy so far this year, somewhat ironically, given the Bank of Japan's intention to double its monetary base by the end of 2014. But it's going to be a slow progress. Getting rid of the deflationary psychology is difficult. And I think what needs to be done is that the third arrow, so-called, of Prime Minister Abe's economic policy program is to really start implementing structural reforms, bring down the corporate tax rate, and in particular implement a privatization program. And if he did that, given that a large part of Japan's gross government debt is actually debt between major government agencies like Japan Post, for example, privatizations would go a long way to actually bringing down Japan's gross debt levels. It would also, I think, re-energize the private sector. And bearing in mind that Japanese households, banks, corporates have especially strong balance sheets because effectively they've spent the last 20 years repaying debt, anything that could revitalize the economy, and I believe a privatization program could do that, then you could set the scene for a new era in which Japanese economy gets back to normal and get to a situation where they can overcome deflation.
The biggest immediate problem for Abe may be whether this week's slew of data for July could strengthen the case for the government to go ahead with a scheduled two-stage hike in the sales tax from next year. Increasing the tax now could kill the positive momentum of an economy that has just started to recover. What do you think, Neil?
Well, I'm not in favour of it, and previous history where the Japanese government has increased consumer taxes has not been a success. In fact, quite the opposite. Last time they tried it, it pushed the economy back into recession. So from my point of view, it's not a good idea. I don't think it should take priority in terms of various fiscal policies. I think there's other things that they can do. I think it sends the wrong signal. Consumers don't need to face higher taxes. I think it would do very little, if anything, to help correct Japan's fiscal imbalances. It could actually be counterproductive. So I actually think they're going down the wrong route with that one. I think the G20 and IMF and OECD have advised them to take a multi-stage approach to doing that, precisely because they're worried that an increase in consumer taxes could easily capsize the economic recovery. So I'm not in favour of it. I'm much more in favour of structural reforms. are actually in favour of them bringing down the corporate tax rate, which is the highest in the OECD, are actually strongly in favour of a privatisation programme. So the consumer tax issue is very contentious, but I actually think it's the wrong thing to do.
Japan's ultra-easy monetary policy successfully drove down the yen, but a weaker yen is a double-edged sword. Japan really needs this yen to remain weak for the foreseeable future, but are these levels sustainable, would you say, especially when considering the global economic backdrop?
Well, that's a very, very good question, and I guess you should see the exchange rate, the Japanese yen, as an indicator of the extent of monetary easing. And what we saw from November 2012, where there was a lot of talk about a change of leadership at the Bank of Japan. We had the new LDP government elected that was putting pressure on the Bank of Japan to be much more aggressive in its monetary policy. In anticipation of all of that, the dollar-yen exchange rate increased quite rapidly from around 80 to just below 105. Which was the high that we saw back in May. Since then, the yen has actually firmed a little bit, and more recently, the escalation of tensions in Syria has created a safe haven effect for the Japanese yen. Looking at the technical charts, there's nothing to sort of really indicate in the near term that this firmness in the yen will suddenly go away. The 200-day moving average from a technical point of view is at 94.5, and there's nothing to prevent a test of that in the near term. But the worst thing that could happen is for the yen to strengthen, because not only does it actually increase deflationary pressures, it reduces the profitability of Japanese corporates. So I think the next leg in all of this is for the Bank of Japan to sort of do a little bit more in terms of loosening monetary policy, be much more proactive in terms of structural reforms. Obviously, a lot depends on the US dollar as well, and we're waiting on what might happen at the next FOMC meeting and some clarity on the Fed's monetary intentions. But once those issues are properly resolved, there may be a case for the dollar-yen exchange rate to start going up again and sort of retest those highs that we saw at 105. And on the longer-term technical charts, everyone knows there are retracement targets at 112 and then 120. But I think that's some way in the distance as yet. I think the near-term prospects are cloudy enough to sort of keep the Japanese yen more or less where it is at the moment.
Neil, thank you so much for your perspectives today. Viewers, that's all from Neil and myself for the moment, but keep up to date with the main currency rate movements by clicking back to Dukascopy TV. Goodbye for now.